Hi, everyone, and welcome to the week ahead. I'm Tony Nash. This week, we're joined by our special guest, Simon Mikailovich from the Bullion Reserve. Simon, thanks so much for joining us. We really appreciate it. We're also joined by Tracy Shuchart and Marko. We've got a lot to dig into this week. The first we're looking at is systemic risk and the case for hard assets. We'll dig into that quite a bit with Simon. Next, we'll go into a little bit on OPEC cuts with Tracy. You've all heard about it. There's no secrets there. But what do we expect for crude prices in Q4? And then finally, we'll take our first look at U.S. midterms. I think we've got a lot to talk with Albert about over the next few weeks before U.S. midterms, but we'll just do a quick dive in this week. So before we get started, please take a look at our product, CI Futures. It's a forecast subscription product. It's $99 a month. We cover a few thousand assets over a 12-month horizon: economics, currencies, commodities, equity indices. So please take a look at that. The URL is on the screen. Thanks a lot for that. So Simon, welcome, and thanks for taking the time on a Friday. I know there's a lot going on in markets, so it's a huge compliment for you to be here. I want to ask about systemic risks, something you tweet about quite a lot, and we've put a tweet, one of your tweets on screen. You talk about the BOE commits to ensure a unicorn in every pot. And, this happened a couple of weeks ago, the Bank of England. And, I'm really curious, when we look at events like the BOE intervention in the long-term gilt market, where do you think the next systemic risks could come from? And I guess, more specifically, do you expect those risks to come from a more developed markets or emerging markets, or does it matter?
Look, first of all, it's a very difficult subject because obviously you can spend hours and hours talking about it. It's like the existential problems of our time. And I know we're also going to talk about gold and systemic risk. So what I think I'd like to do is I'd like to tell a little parable.
Great.
That kind of explains, I think, or illuminates the situation that we're in generally, and the dichotomy that may exist, I think exists between markets and life out there. And the parable, comes from very appropriately named for the times, from Russia with Love, which is Ian Fleming's story, one of the James Bond books. And just to set up this quote that I'm going to read to you, the situation is that James Bond is absconding with a Russian decryption machine on a train, and it's supposed to be met somewhere down the line by the British intelligence agents. And he's accompanied by a much wiser and older head of station from Istanbul, whose name is Kerim Bey. And Kerim advises him to get off the train immediately because there's existential danger. They're being hunted. And Bond wants to see this gamble through. And so Kerim tells him a little story, which I'd like to read to you, which I think kind of explains more or less or answers your question about systemic risk, and generally what's going on between the markets and events that we're all observing through press, but may not necessarily fully understand or yet appreciate their implications.
Right.
So what Kerim tells him, he says, "You're a gambler. To me this is business. To you this is a game." And then he puts a hand on his shoulder and he says, "This is a billiard table, an easy flat green billiard table. And you have hit your white ball and it is traveling easily and quietly towards the red. The pocket is alongside. Fatally, inevitably, you're going to hit the red, and the red is going to go into that pocket. It is the law of the billiard table, the law of the billiard room. But outside the orbit of these things, a jet pilot has fainted, and his plane is diving straight at that billiard room. Or a gas main is about to explode. It already has, actually, in the real life with Nord Stream. Or lightning is about to strike, and the building collapses on top of you and on top of the billiard table. Then what has happened to that white ball that could not miss the red ball, and to the red ball that could not miss the pocket? The white ball could not miss according to the laws of the billiard table, but the laws of the billiard table are not the only laws, and the laws governing the progress of this train and of you to your destination are also not the only laws in this particular game." And so the point is that for 40 years, the markets, the financial system, and the economy has gone along with that, have lived by the laws of financialization, by the laws of the billiard room and of the billiard table.
Yep.
And other laws that are outside the real economics, war, famine, pestilence, inflation, have not entered into the equation. And so within the framework of the billiard table, there is no, for example, US Treasuries do not have credit risk. US dollar does not have counterparty risk. Banking deposits are safe, 100% safe. That's by the laws of the billiard table. That's by the laws of the markets. So essentially, this bubble, the everything bubble, that the credit bubble that we have been in for X number of years, all the problems inside this bubble were nominal problems related to nominal values in financial markets. And those values can be fixed by creating additional money, by creating additional credit, by creating conditions, by providing liquidity. What cannot be fixed inside this bubble are real problems, like energy shortage, like supply chain disruptions, like world war, like the fact that a significant number of other countries are suddenly developing their own ideas as to economic policies and monetary policies and other policies that they want to pursue, whereas our system has come to depend on the US dollar as a source of cheap financing without any limits and without any constraints on our ability to create credit, create money, pay the bills, however much, in any quantity at any time. And so when you ask me about systemic risks, what I would say is that systemic risks are coming from outside this framework and are not yet fully understood inside the framework, which is why, for example, the dollar is on a tear relative to other currencies. And the phrase that's used to describe it is it's the least dirty shirt. What is not being said in that statement is how dirty is the least dirty shirt? Has it been already worn for 10 days and all the other ones for 20 days? Or is it just been worn for 10 minutes? Yeah, that's my point. So, how healthy is the healthiest horse in the soap factory? That's the question. Right.
And I guess the question about systemic risk, which is almost unanswerable, but when these things break, do they usually break gradually or do they usually break all at once? Is that an answerable question?
Well, they break gradually and then all at once, just like, that famous, also overused quote from Hemingway, how do you go broke, slowly and then all at once. Yeah. I mean, obviously, it's like you can think of this phenomenon as a confidence collapse. Now, confidence collapse is not a problem in itself. It's a consequence of other problems where the preponderance of the evidence and preponderance of the mental recognition reaches a certain critical mass where in the physics it's called phase transition. Like, for example, boiling water, which looks the same whether it's half boiling or almost boiling, and then suddenly you see the bubbles, you see the churn, and it almost happens in a moment, but it didn't happen in a moment. It's been heating up for a while.
Right.
So that's how I would describe it.
And this is all great. I guess if we have a doomsday clock, are we like really close to midnight, or are we kind of approaching midnight and it's something that will come at some point? I mean, I know that's kind of an ambiguous question, but does it feel to you like we're really close to midnight, or can we put it off for a little bit?
Well, I would answer it this way. I think the proverbial train has left the station. In other words, the crisis is now underway.
Okay.
The crisis, geopolitical crisis, military crisis, supply chain crisis, economic crisis, and financial crisis. And political crisis. You're going to talk about elections. So all of these events, and by crisis, I mean a moment of high danger, again, develops similarly to boiling water. A crisis itself, once it starts, it means the heat is now in real time is going up. The boiling point has not yet been reached. How long does it take to reach it? It depends on the intensity of the flame, right?
Yeah.
So that we cannot gauge. But what we can gauge is that the process has started. And it can accelerate or decelerate as it goes, but I don't think it can stop suddenly.
Right. And US president using the word Armageddon in a fundraising speech half a dozen times this week doesn't really help lower the boiling point.
It does not help lower the boiling point. It does not help. So, and frankly, I think that people are not paying much attention to what happened with this Nord Stream explosion. But this is a first act of sabotage against an international supply chain
Sure.
infrastructure, which I think is going to have dramatic consequences ultimately because it changes the rules of the game.
Sure. Okay,
Because
let's
this
move
suddenly
on.
something unthinkable becomes feasible.
Yeah, Tony, just real quick. Yep. I agree with Simon on the systemic risks, and the fact is the Fed policies have completely ignored geopolitical issues, political issues, supply chain problems. I mean, they keep going on this tear about raising rates is going to bring down inflation, but then they put themselves in doom loop because the demand is going to come back faster than the supply damage that they're creating. So yeah, Simon is correct that the systemic risks are there and getting worse, and I don't see any chance that they can be alleviated in the next six to 12
I'm
months.
skeptical that ongoing rate rises or rapid rate rises is going to have an impact on inflation. Given
wait till they end QT in the next couple months. And continue on with rate hikes, thinking that's going to fix things. It's not.
It's not. It's whistling past the graveyard. It's way overused, but I that's what we're doing. Simon, before we move on to other things, I want to ask you about gold. Okay. Tracy kindly put out some questions or a question for you last night, and we got some responses from some Twitter users. And this Twitter user Spudlink1 asked, if gold doesn't rally in this environment, how could conditions possibly get more perfect than the last 3 years? Is gold dead? So very poignant question, but what are your thoughts on that?
So my thoughts on that are very simple. Gold is not a company. It doesn't release results. It's not like things are going better or worse. Gold is the same gold. So the price of gold and the prospects of gold are not determined by gold itself or anything that it does, but it is determined by supply and demand, which is human driven. So it's human perception and human behavior. So why is gold not behaving like certain people like this gentleman expect it should? That's because what this gentleman thinks and what few of us think is not accepted as received wisdom by the vast majority of investors. That's not consensus. So the fact that these are perfect conditions for gold is absolutely not consensus. Because by the rules of the billiard table, inside the billiard room, gold is not seen at the moment as a safe haven. The dollar is, because the dollar is fiat gold. Now, fiat gold is no gold, but inside this framework that we've been in for 40 years, it has been. And so demand for gold, you don't need to take my word for it. I mean, you can just look at the, you can look at the ETF flows, like GLD publishes ETF flows. I mean, you can see that money is not flowing into gold. So demand from investors for gold is anemic in an environment where some of us think it should be robust. But that's because we see certain things and we believe that there's tremendous systemic risk, and market at large does not believe it. And you can, again, you don't need to take this as the only example. You can look at the treasuries. They're trading, 4-something% with 8% inflation. Well, why is that? Well, because the break-even rate, which is market expectation of future inflation, the forward curve, shows that rates are actually positive and getting more positive because inflation is supposed to drop to 2-3% imminently. Well, is it going to? Well, that's conventional wisdom is that it will. Right. So that's one thing. The other thing I would say is when people say that gold is dead, I mean, it's an American-centric view because gold is essentially a reserve currency. It has outperformed all other currencies, reserve currencies, but gold. So let's say in dollar terms, gold is down like 6% year to date, but in yen terms, it's up 18%.
Yeah.
In pound terms, it's up 13%. In euro, in Swiss franc, all of the DXY components, currencies, the DXY Canadian dollar, in all of those currencies, gold is up. So gold is outperforming financial assets. Stocks, S&P is down 23%. NASDAQ is down whatever it is, 33 or 34% year to date. Gold is down 6%. So it's outperforming financial assets and an underperforming US dollar because US dollar is gold by the rules of the billiard table.
Yeah.
And the guest line has already blew up, but maybe the plane has not yet hit the room.
Yep.
And so as long as that's continuing, everybody's playing by those rules where there's no credit risk in the dollar. So if there's no credit risk in the dollar or in treasuries, in US, sovereign obligations, then by the dint of that reasoning, getting any kind of coupon beats getting no coupon.
Yep.
If you factor out credit risk.
True.
And market is not factoring in credit risk. And so, I think the credit risk is tremendous. And obviously people who are asking and wondering how come gold is not, surging, they think there's credit risk, but that's a minority opinion.
Yep.
That's a simple answer to this question.
That is fantastic. Thank you so much for that. This is an amazing perspective because I think there is a lot of cynicism around gold in the markets today around kind of popular chatter, and it's so great to get this perspective. It's a bit refreshing.
Tony, I've been a big critic of gold for a long time. However, in this scenario, I even have to admit that if you want to arbitrage for dollars, especially in other currencies and FX, gold is the only real way to do it. And the longer that the Fed makes errors in policy, there's no question that people are going to start resorting to gold just as a hedge.
Interesting.
Okay. My only warning to people is gold is a commodity that's it's an industrial commodity in physical form. So of course, all the paper gold exposure has counterparty risk. Physical gold does not have counterparty risk, but physical gold is a manufactured product, and manufactured products, bars, coins. By the way, the premiums on coins is surging. It's doubled this summer since the beginning of the summer. So manufactured products, their supply chains, their manufacturing facilities that produce them, they have, they can work 24 hours a day, but 3 shifts, but they can't work faster than that. So just like with toilet paper, it all works until suddenly there's a surge in demand.
Yep.
Then there's no toilet paper in your supermarket. It's the same thing with gold. It's available until everybody wants it, at which time, by definition, it's not available.
Yep.
Because the inventories and supply chain is geared towards past demand, not towards surging demand. So as soon as demand surges, it disappears. So you buy insurance when you can, not when you think you really need it, because you're not the smartest guy or person. Other people achieve the same, reach the same conclusion at the same time. And so everybody wants insurance when, at the same time.
You're the only guy I've ever heard who compared gold to toilet paper in a positive way. So that's
well.
So okay, let's move on to crude from one physical commodity to another. Tracy, we talked about OPEC in recent weeks. We talked about crude prices in recent weeks, and with the OPEC announcement, the supply cut announcement this week, I want to revisit our discussion from a couple weeks ago about crude prices in Q4. We talked about the possibility of a whipsaw effect in crude prices in Q4. What's your thoughts on that? Do we see that happening?
Well, I think first I kind of wanted to touch on this 2 million barrels, because it's not actually a 2 million barrel cut, right? Because the group hasn't been producing at quota all year, basically. So we're running at a 3.58 million barrel shortfall, really, which happened in September. And so if we take a look at the cut distribution, yes, the 5 countries that are producing at or near quota, which are Iraq, Kuwait, Saudi Arabia, UAE, and Russia, yes, they are shouldering most of that burden, but when you net everything out, it's really closer to like 1.25 million barrels. So I just kind of wanted to clear that up, because it is really not 2 million. Going into Q4, what we have to pay attention to is, one, the ending of the SPR, which, if they keep releasing it, eventually it will drain. But so far it should end in November, which is going to immediately take 4 to 7 million barrels off the market, because that's kind of what they've been releasing per week on average. Then we also have to look at China and their COVID lockdowns trying to come to an end, because they're looking for a 5.5% GDP by end of year, which is not going to happen. But
it'll happen.
Well, on paper it'll happen.
Statistically, it'll happen.
But we are starting to see a little bit of firmness in mobility data, in traffic and airlines. What I'm also looking at is they are talking about lifting export quotas. If they do that, that means they are going to have to purchase more crude barrels because it would be a significant increase. And so those are kind of the things that going into Q4. In other words, I think the pressure is definitely to the upside rather than the downside. Just looking at what is coming online potentially that could propel this market higher. As far as, we're already in a structural supply deficit, so it's not going to take a lot for this market to kind of freak out.
Post US midterms, post CCP meeting, post SPR, post other stuff.
Right, and then December 5th, we have to see if EU actually follows through with their oil and product embargo for Russia. So that's also another thing that would take more barrels off the market.
Right. So I've also heard, I think you may have said it, where this OPEC meeting and what we've seen over the past few months is really OPEC changing their orientation to Asia and really forgetting about the West. Is that real, or are you seeing that in fact, or is that just kind of a myth?
Well, no, if you look throughout, the last few years, China and Russia basically compete. Russia and Saudi Arabia basically compete for China's business. So off and on, one of those countries have been their biggest supplier. So this is not new, where the focus is towards Asia, especially because over the last few years, the West is, pursuing green policies and trying to stay away from that. And so where they can sell barrels, like you see Saudi Arabia or you see OPEC in general raising their OSP to Asia consistently, right? Because they can capture above markets for their barrels. And so, that's not really a new phenomenon.
Well, but China's perpetuating green policies too, right? Kind of wink, wink, supposedly.
Right.
As they build out coal plants and other things. So, but I think what I find interesting is Europe and the US are kind of begging for more energy, and OPEC is saying, no, we're going to cut back. I think the headline is more important than the fact. The 2 million is more important than the 1.25, because that's what's really moved markets in the immediate term. But China had really bought all their crude already by, say, April or something. Right. And so they had fixed all that stuff, the prices for the year in kind of second quarter. So this doesn't, at least for now, it doesn't really affect them. It won't affect them until early next year, something like that. Is that fair to say?
Well, unless in Q4 they raise these export quotas, then it's going to matter, because that's still on the table for discussion. And that's going into next year. This is kind of a last minute thing. And so, that's definitely something that I'm watching, if they actually follow through with that.
Right. And also with purchases in a dollar equivalent, whether it's not US dollar, whether or not it's US dollar, these are extraordinarily expensive barrels compared to what they could have gotten in Q2. So something has to change for them to want to buy the volumes that they bought. And then if they're buying at the same time the US is trying to refill the SPR, that creates even more pressure on the market. Is that fair to say?
Yeah, absolutely. Absolutely. And in fact, our SPR barrels are going to China right now.
Right. Which is, silly. So Tracy, what are we missing? We've heard all this chatter about OPEC over the last couple of days. What's the nugget that you feel like people are missing?
I think what's, as, prices have come down, I think, everybody has been forgetting we are still in a structural supply deficit, right? And so even though prices were coming down, they were down to extraneous reasons like recession fears,
right?
And, not as many Russian barrels off the market as initially anticipated, but really the market structure hasn't changed.
Right.
And nor has the supply problem.
Right. Let me add another question there. I want to ask about refining capacity. What are we at now with refining capacity?
We need more refining capacity. That's that's the end.
90 something.
We're currently, we've been between 90 and 95% of our refining capacity, which is crazy, because I'm actually surprised that we haven't seen more part breakdowns and more refineries online, because they're not built to go at 95% consistently.
So we have a hurricane, goes through Louisiana, cuts out some refineries for a week. What does that do?
That would be a little bit of a relief for crude prices, right? Because you
Sure.
can't get rid of the barrels, but that's going to take your product prices through the roof, and your crack spreads are going to go through the roof.
And what's the lag on that? How long would that impact gasoline prices? A month, 2 months?
Not immediately.
No, I know, but how long? What's the tail on that?
Oh, that really depends on how long a refinery is offline for, right? Whether it's, if it's a week or two, that's fine. But, if we start going into, like Katrina, where you're going into months, then that's gonna,
It's very
be a much
difficult.
longer problem.
Okay, very good. Thank you for that. And as we talk about gasoline, it becomes very political at some point. And Albert, as we go into, we're deep into the midterm season right now, and I've got a couple of graphics from Real Clear Politics looking at the House and the Senate races in the US. And it looks like it's very competitive in the Senate. The House, it seems like Republicans are doing very well to reclaim the House, but it seems like the Senate's really competitive at the moment. Can you walk us through that?
Yeah, well, simply the House, the Republicans will easily take the majority. Redistricting alone will give them 20 seats, which is a majority. And then you start looking at any Democrat that won with 2% or less across the country is probably going to lose. So I think that we'll probably end up getting 250 seats in the House for the GOP. The Senate is
35, just for non-US people. That's 250 seats out of 435 seats.
Yeah, exactly. So I think that would end up being like 185 for the Democrats, which is important because you need a buffer to avoid any messy infighting. The Senate becomes difficult because we have the Republicans have kind of weak candidates in Oz and Pennsylvania, and Walker in Georgia. If those two candidates were stronger, it would have been a slam dunk, but it's not at the moment. Nevada looks like it's trending towards the GOP, which is a big problem for the Democrats at the moment. If they lose Nevada, they'll probably end up losing Arizona. And if they lose Arizona, it's going to be a 1 or 2 seat GOP majority.
Okay. And so what does that do? So, okay, we covered Pennsylvania, right? You said it's potential Republican, but not strong. Georgia, potential, but not strong. Arizona is leaning that way. Nevada is leaning that way. Wisconsin, is Wisconsin?
Wisconsin and North Carolina are a solid Republican.
Okay.
I'm not even looking at them anymore.
Okay. So then what does that mean for the second half of the Biden administration?
Not good things. There will be hearings all over the place, from Hunter Biden's antics to Biden's pipeline policies and environmental policies that's affecting the economy at the moment.
Border crime, elections,
election integrity. I mean, you name it, it's going to be all over the news. So it's just not good for the Biden administration. I expect him to keep on going with executive orders because there won't be anything that he can pass.
Okay. Very interesting. Now, for the people not in the US, most Americans view legislative gridlock as a good thing, right? I mean, it's a good thing for business when we have legislative gridlock. So this is not necessarily a bad thing for US government. There will be a lot of talk about, can't pass a budget, can't get extensions on certain things. And that's just drama that comes every year. But legislative gridlock is not necessarily a bad thing for American business. Is that fair to say?
It's not. You're absolutely correct about that. However, with Biden insisting on producing executive orders for his own policies, and the Treasury with Yellen just acting insane, in my opinion, God knows what they're going to sit there and pass. If you can't pass something legislatively, they'll do it via budgets.
That's fine, but it sets a terrible precedent going forward, because that's
we're well past that, Tony. We're well past that precedents. We're well past that.
Okay, great. Albert, this is the first. I want to cover this over the next couple of weeks as we lead up to the election. So I just want to give people a taste of what we can talk about. So if we don't mind, if you guys don't mind, let's just go around, and I'd love to know what you guys are looking for in the week ahead. Tracy, do you want to get us started? Then Simon will go to you, and Albert will go to you. What are you guys looking for the week ahead?
Obviously, I'm watching the energy markets, right? As we get closer and to see what sort of policies the U.S. is going to, or the current administration is going to try to pull out of a hat to derail oil prices in front of midterms. They've been talking about fuel bans, fuel export bans. They're talking about actually trying to pass the OPEC bill again. They're also talking about actually seizing assets of Saudi Arabia, which they do own Motiva, which is the largest refinery in the U.S., which is paramount to all-out oil war. So closely watching the administration and how they're going to move forward with energy policy.
Is this Venezuela thing real? Will they dial back the restrictions on Venezuela to get Venezuelan crude?
Venezuela produces 700,000 barrels per day. And literally most of that goes to China to pay debts. There's nothing more you can squeeze out of Venezuela. It's a fruitless.
Okay, that's good to know. So that's fake news. All right. Okay. Simon, what do you see going into the week?
Well, I mean, a week is not my frame of reference in my business. But I think that the most important thing people should be watching are international geopolitical developments, because I believe we are in a world war. It sounds very dramatic. War usually is assumed to be, bombs flying, but there are other forms of enforcing essentially will on other people, and economic, financial, political, ideological, cyberspace, space, outer space these days. So I think the most critical thing to watch are developments like what Tracy's talking about, confiscation of Saudi refinery. I mean, that's an act of war. That's an act of economic war. So this is where I think a lot is going to come from. And the other thing, I would watch very carefully for the types of developments like what we saw with gilts in UK. Just overnight, things happen. Like, for example, the repo lines right now are in excess of 2 trillion. I mean, in 2019, the first blow up, they went in with 30 billion. So this is a crisis that's continuing and is being bailed out by the Fed. So I would watch all these excess telltales of all these excesses and watch for ripples on the surface to make sure to identify, if something is really breaking, like you said, when is it going to come? Well, is the water starting to boil? That's what I'm watching.
So just real quickly, do you get the sense that, at least in the US, they're trying to hold this back until midterms and then we'll start to see a bunch of bad news come? Or does
they're obviously, for example, I mean, they're releasing a strategic petroleum reserve, which is clearly controlling, an attempt to control energy prices at the pump, gas prices at the pump. So yes, I think after the elections, we're going to see some dams break. Yes.
Okay. Interesting. Albert, week ahead, what do you got your eyes on?
CPI, and I think it's going to end up coming in hot, and all of a sudden you'll see the dollar surge once again, maybe even threatening 120. And then you talk about what Simon's saying about things breaking, and a building up of a narrative of ending QT, although we haven't really started it, but It is what it is.
Wow, exciting times, guys. Thank you so much. Thanks for your time. Thank you very much for all your insights, and have a great week ahead. Thank you very much.
Thank you.
Thank you for having us. Take care. Bye-bye.